So, welcome back to the Armchair Trader podcast. And this week we are revisiting the biotech sector, which we know is of great interest to a lot of our listeners and indeed our readers on the Armchair Trader website. Interesting week to be recording this as I see the price of Gene Drive is off to the races again today. But that demonstrates just the level of focus that investors have in this sector. So we've got another fund manager on the show today who's going to be talking to us a little bit more about what's going on in the world of biotech. We welcome Dallas Webb, who is the portfolio advisor to the listed Swiss investment company BB Biotech. So welcome to the show, Dallas.
Thank you, Stuart, very much for having me. And on behalf of BB Biotech, we also say thank you to all your listeners as well.
Can we start off just basically giving us a little bit of a description of BB Biotech, what it is and what its approach is to the biotech sector?
So I've been with BB Biotech for over 15 years now. It'll be 16 in August. So got some good time there. Prior to BB Biotech, I was on the sell side for about four years, covering the biotech sector. And so now I'm in the sector for about 20 years. So I've gotten to see quite a lot of the ups and downs, ins and outs of the sector, how it behaves. I did my undergraduate research in pre-medicine, microbiology and zoology. I then went and got my MBA in finance, and that's how I was able to marry the medical field with the financial field and got me to where I am now. BB Biotech itself, we were founded in 1993 in Zurich. We're sitting currently on approximately $3 billion in net asset value. We're long-only closed-ended fund. We trade on 3 exchanges, Switzerland, Germany, and Italy. We do an extremely due diligence deep dive on all of our investments, and that includes extensive financial modeling as well. We can invest up to 10% in private equity. We're currently publicly invested, but we have that option to do privates. And what we're looking for in our investments is true innovation. So we don't do generics. We don't do Me Too drugs. We don't do devices. We're purely biotech therapeutics. And we do have quite a seasoned investment team. We have 4 portfolio managers based in Zurich and 3 in the U.S., one of which I am. And we have our U.S. headquarters in Manhattan. And I'm living in the Boston area, but commute there quite often. And then finally, for BB Biotech, we do have a very seasoned board of directors. And this board has to approve all investment and divestment proposals. So lots of sets of eyes on every investment that's in the portfolio.
From the perspective of professional money managers in the biotech sector, how important is it, and you've mentioned your background already, but how important is it that they have some level of formal sort of clinical background in terms of their academic background, that they've done some kind of life sciences exposure? Would you say that that's essential, that you've got that kind of understanding?
I think it's very important, but I think people that have worked in the sector for so many years, you pick up a lot as you go. So I wouldn't say it's an absolute mandatory criteria, but it's definitely very helpful. Absolutely.
And I wanted to talk a little bit about the sort of top trends going on in biotech at the moment, and see if you could give us a little bit of perspective on those, namely neurological diseases, which is a big area, gene therapy, another one that we hear a lot about, and then also the increasing use of artificial intelligence in the biotech sector as well.
Absolutely. So all 3 of those points that you mentioned are extremely on point. Those are very hot topics right now and areas where we are very active. In the neuro side, not only are we in the psychiatric, such as depression, etc., but we're also in the neuromuscular side as well. An example there is Ionis with their SMA drug. And then moving to gene therapy, very active there. We've we have one investment now in gene therapy. We've had two others that were actually bought, so Avexis and Audentis. And gene therapy is a very interesting space right now. We've seen a lot of clinical holds getting put, especially in the AAV space, and I think it's just showing that the as these technologies evolve so quickly, the FDA is really trying to get their hands around what's happening biologically, and that doesn't mean that these clinical holds are going to kill the sector or anything. It's just keeping people a little bit more cautious. But I think gene therapy is here to stay. It's a very, very powerful technology, and we meet with multiple gene therapy companies every week. I think there's over 320 private gene therapy companies right now out there in the field. So it's a growing field. It's here to stay. It's just more navigating some of the some of the clinical benefits and impacts there. And then regarding artificial intelligence, definitely a very hot field, a very important field on two levels. One level from the investment side, so investors like ourselves using AI to help us um, you know, somewhat predict clinical trial readouts, those kind of things. And then on the other side of the spectrum, companies using AI to increase the productivity in terms of drug screening and increasing the efficiency in which a drug target is identified and then getting that actually into the clinic. So I think artificial intelligence is going to play a big part going forward and increase efficiency across the board for both investors and companies.
And you mentioned there something called clinical holds. Can you just explain a little bit more about what you mean by that?
Sure. So a clinical hold, it's just what it sounds like. So a company is running a clinical trial, and then the FDA alerts them that based on data that they've been giving to the FDA over time as the trial has been running, the FDA thinks they need to stop enrolling patients in that trial and find out whatever the specific issue is that the FDA has, whether it's safety or lack of efficacy. So, an example would be if a gene therapy company is running a study, they're giving feedback to the FDA constantly, safety data, mainly, of course, up front. And if the FDA identifies a safety signal that it's not comfortable with, it will say, okay, we need to put your clinical trial on hold for now until you supply us with more information or change clinical protocols to preserve the safety of the patients. That's in a nutshell what clinical holds are.
And with some of these new technologies, because they're so new, people don't know, from the regulatory perspective, there's less understood about them, so they're just being extra cautious when it's a very pioneering company with a very pioneering therapy.
Absolutely. And when you look at gene therapy and also gene editing, in some cases you're altering the human genome in certain cells. So these are, one-time treatments in many cases that will have a lifelong effect. So if they're seeing a safety signal in very early studies in a small amount of patients, they're going to say, okay, let's put this on hold and make sure we understand what's going on here before we keep enrolling more patients. So they're, keeping the patient safety as a top priority.
And from your perspective, you've mentioned already that you as BB Biotech, you can get into private companies, you can get into listed companies. What do you favor in terms of the actual size of companies? Do you favor, say, small cap versus mid cap, or do you lean more towards the larger players out there? Where do you see the sweet spot in terms of firstly the size of the company, and then private versus public companies?
Sure, sure. Lots of questions in that one. No, I think it's a great question, and we get that one a lot. So on the public side, our sweet spot is essentially the mid cap space. And one of the reasons for that would be that when a company gets to the mid cap size, usually they've had some type of proof of concept data to come out to de-risk either the asset and or their platform. So that's why the mid cap space is very attractive. However, we do also invest in the small caps, and when we invest in small caps, uh, it's all about the data that we can analyze. It's all about the science and the innovation that they're bringing. So, for us to get a high conviction in a small cap, they're going to have a truly transformative pipeline, a truly transformative platform. That's what we'd be looking for in a small cap. The larger, big caps and especially large pharma, we're not as involved in. We see the mid caps is very exciting in terms of growth, but that also comes on the flip side. In bear markets, mid caps and small caps get hit much harder. I think we've all seen that, but that doesn't deter us. We still stick true to our strategy. Now, when it comes to privates, it's very similar to the small cap strategy. It's going to all be about their science, all about their platform, and also management integrity is very important, especially on the private side. So, the bottom line is for us, it's all about the technology and the platform and the data that they have in front of them. So, I we're almost somewhat size agnostic, but we definitely apply a much higher discount rate to the small caps in our DCF modeling, as well as the privates, because with privates, obviously, there's huge liquidity risk, right? And if they're earlier stage, then they'll also get a higher discount rate in our DCF modeling, basically saying they're higher risk.
And I mean, small caps, I mean, we've seen here in the UK, there's been a lot of interest in certain names in the market that are, I can really only describe them as small cap, if not micro cap companies, usually because there's one treatment in particular that's very topical. Investors like that. Recently it's been around COVID testing or treatment of COVID. From your perspective, when you're dealing with something like that, how do you manage risk in terms of getting exposure to companies like that? Because obviously you're as a big listed investment company, that you could easily take quite a big slice of the action in a small cap. So what's your, you've already mentioned obviously that the science is important, but what other sort of risk management protocols do you have there?
From a very high level, our risk management protocol involves not only myself, if it's a stock I'm looking at, whether it's small cap or private, first of all, my team has to approve of the investment. So, the other six portfolio managers will go through the model. They'll, ask lots of questions, etc. If my team then agrees with me, I then have to propose that to my board of directors. And it's a very seasoned board, very professional board. And they are ultimately the ones who will say yes or no to an investment. So, one of the big risk management strategies we have is to have multiple sets of eyes looking at one investment, not just mine, just so I don't have my bias pushing it forward. We also, as I earlier mentioned, apply higher discount rates to higher risk companies. And therefore, if our DCF comes back and the valuation doesn't match, we don't invest. So I think those are two of the major risk mitigations we have. Another thing we do with our board is twice a year we have what are called strategy meetings. And it's where we get in person with our entire board. We invite our portfolio managers, portfolio companies to come present, and then the board gets to interact with our investments as well. So it's another level of engagement of the board of directors. We also invite companies on our monthly board calls. So it's just a constant evaluation and monitoring of what the companies are doing.
Is this a sector that you see a lot of IPO activity in biotech companies coming onto the market for the first time? And is that something that you like to get involved in as well when there's a new company coming out?
Absolutely. The IPO market was extremely hot for a while and doing very well. I was getting, 2 to 3 new IPOs in my inbox every day almost for a while. So it became overwhelming in a sense. But I think that started to cool off. A lot of the IPOs started very much underperforming. And in fact, I was on the phone all morning with different bankers today because we are getting very active in our diligence process in the private sector. Um, and they're saying now, IPOs, a lot of these companies are getting a lot more, let's say, cognizant of their valuations of what they think their valuation should be and where it actually is. So it's telling them to take kind of a deep breath and say, look, you're not going to get that valuation in an IPO. And in fact, when I speak with private companies, I urge them to stay private, until they absolutely need to IPO, because these markets are so difficult. So the short answer is yes, we definitely participate in IPOs. We participate in crossovers. Um, but right now, I think, given market conditions, I think the IPO market's going to be much slower than it has been, let's say, over the last 18 months.
Thinking about, as you say, volatile markets at the moment, some investors will be looking at traditional defensive stocks. Big pharmaceutical companies, the pharma sector generally is always favored at these times because people don't stop falling ill. Um, there is more focus now on this sector because of COVID, and people are more interested in it than they used to be. How do you see the biotech market faring under the current conditions? Because obviously biotech is not big pharma; it's much more sort of research driven, much more pioneering. How would you expect it to behave under the current state of market volatility?
Yeah, I think COVID is definitely an overhang. I think it's an overhang for every sector, to be honest. But in terms of biotech, where COVID really hits hard is number one in clinical trial enrollment and how they proceed, and number two in the sales of certain drugs. So, for example, one of our portfolio holdings, Neurocrine, they have a drug called Ingrezza for a disease called tardive dyskinesia. It's a disease of irregular movements caused by schizophrenic drugs, and the diagnosis really requires people and doctors and patients to be together. So COVID did impact them quite a bit. Nonetheless, they're still growing, but that's one way COVID can impact the biotech sector. But that being said, I would say that a lot of companies now, and a lot of, especially the companies that are running clinical trials in human beings, uh, they and their clinical trial sites have gotten more, let's say, adept to navigating the COVID protocols and getting patients to actually be able to come in for in-person visits. I think the sector as a whole is learning how to navigate this issue. The one of the big overhangs is, as we saw with Omicron this past fall, is that new variants come out with COVID, and so a lot of people are kind of sitting there thinking like, well, once the next one comes out, it's going to really impact the sector again. So that's why I think once we start getting more, let's say, used to COVID, new variants, etc., I think things will smooth out a bit there.
And then basically other factors like inflation, obviously interest rate increases worry investors. We've just seen the Bank of England here raising rates. Would you anticipate that will affect the biotech sector and M&A activity within the biotech market?
Yeah, another great question, Stuart. So, increasing interest rates are, I think, just perceived negatively across stocks as a whole. Borrowing costs increase, etc. But this doesn't universally apply to biotech, in my opinion. But the perception can definitely create an overhang on the stocks. Um, Inflation, historically tends to drive investment in other sectors such as commodities, real estate, etc. So the biggest impact that I see these increasing rates and inflation having upon the biotech sector is basically it's keeping generalists completely on the sideline. So we're not having that generalist cash inflow. So it's basically a specialist. But I can tell you all the conversations I've been having over the last months, inflation and interest rates have not been brought up at all in the conversation. So to specialist investors, I don't think it's as much of an issue, but it's definitely something that kind of spills over to our sector across the equity markets.
I mean, speaking of specialist investors versus generalist investors, have you been seeing any more generalist investment money coming into the biotech sector because of COVID and because of the focus that's brought to certain specific companies, or is it still very much specialists who are interested in this area?
I think by large and far right now it's specialist. Um, Even when I was speaking with some investment bankers this morning, and I asked them, I said, "Do you have any generalist interest in the biotech sector?" And they said, "Absolutely not." So I think by and large it's specialist driven.
Do you think that that's partly because it's a difficult sector to understand? Some people it's a bit like mining in that you require a level of technical understanding to really get to grips with what a particular company is doing, and because so much depends then on getting FDA approvals, and it's hard for a generalist to really be able to gauge whether this company is going to make it or not, or whether this particular treatment is going to make it or not. And I guess in a way that sort of plays into your hands because you can do that for investors because you have the specialist knowledge, and they can invest with BB Biotech, for example, and let you get on with that side of things.
Absolutely. I think that's a very, very fair comment. And if you asked me to analyze a mining company right now, I wouldn't even know where to start. So um, I think it's a very fair comment. Biotech can be extremely technical, extremely involved. Um, and let's just be honest, it's a highly risky sector. It is. But from BB Biotech standpoint, what we try to do is provide our investors with access to the biotech market without them having to, you know, go to medical school. And you know, we believe fully in the biotech sector, and I've seen these downswings before. Markets do go in cycles, and we're fully confident that the fundamentals of the biotech sector have never been better than they are now. We're just caught up in let's say, a perfect storm of bad things happening. That being said, there were several clinical setbacks over the last 12 to 18 months. That's fair. But it seems like good news is sell the news, bad news is kill the company. That's kind of the attitude I'm seeing right now from investors. And that's not us. We're fully in this, and we are very fully confident that this is going to come back. And the biotech sector is delivering extremely promising new medical therapies for patients that in some cases were never even available before. So we're still very positive, even in a tougher environment.
And I can't really finish without mentioning Moderna, which has been one of your bigger positions. What's your feeling on that? Because that's obviously something we know a lot of our listeners, a lot of our readers on the website, been very interested in that particular stock. What's your opinion on that, and how well have you guys done out of Moderna?
So to answer your last question, we've been extremely profitable with Moderna. Moderna has been a huge winner for us. And of course, the stock is extremely volatile around these COVID updates, whether it's Pfizer's oral pill or a new variant, whatever. We've made a huge return on investment in Moderna. Um, they have an excellent management team. We are very, very close to them, almost on the phone with them every day. Um, but we didn't invest in Moderna because of COVID. We invested, actually, we invested when they were still private. But um, the pipeline there, I think, holds a ton of promise, especially their vaccines. So they're looking at influenza, RSV, cytomegalovirus, and we've seen what they can do with COVID. So their platform now has proof of concept that it works very well. So I think Moderna is an excellent company, and it's been a huge win for BB Biotech and the world in general with the amount of vaccine they've been able to produce for a small biotech and the amount of cash they have on the balance sheet. It's it's a great investment for us.
And I can't. I mean that. I just one last question I want to ask you before we finish, and that's really more from the perspective of strategy when you approach a company. One of the things I've noticed with biotech companies is, from the private investors' perspective, is a lot of private investors will see one particular drug or treatment the company's working on. This is particularly the case in the small cap area. Um, and even though that company might have several different drugs or treatments in development, everyone is focusing on this one, which they think is going to be the gold mine for that particular company. And that's what suddenly will drive the price if it's a small cap stock. Um, when you're looking at biotech companies, is it a case that you'll be particularly interested in one specific drug that they might be working on, or is it more a case of you like to see a company that's got multiple treatments on the go? Because one of the things I've noticed, having looked at some of these biotech small caps which have performed well or performed badly over the last 12 to 18 months, has been a lot of them are doing a lot of other very interesting things. They just happen to have a COVID related treatment that everyone suddenly gets incredibly excited about. But they're doing, they've got work on the go in cancer, they've got work on the go in dementia. Those look like very interesting medicines, but you get the feeling that the private investor doesn't really pay that much attention to the other stuff going on under the hood. From your perspective as a sort of professional, do you tend to focus on the whole suite of the company's work, or is it more a case of one particular treatment comes up on the radar, or is it more a case of really depends on the company?
Yeah, it's a very broad question, but a very good question. So when we look at companies, if they are in clinical development, we'll look at their lead asset, and that'll be, let's say, the basis of our valuation. So that'll be the one we model out in terms of revenue forecasting. That being said, we look at what their platform can do, not just their pipeline, but their platform, the technology that they have. And if that lead asset is the basis of the valuation, then that can provide proof of concept for the rest of their platform pipeline, if that makes sense. And so, yes, we will look at the most advanced compound in their pipeline, as will most people. And you have to do that because if that one fails, then you're kind of run into some problems, especially stock price wise. So we definitely look at the lead asset, and that's the most important in our valuation. But the pipeline can add a lot of value. An example of that is Ionis. Um, Ionis has over 40 compounds in their pipeline. I think they have 6 phase 3 studies running. So their pipeline already has the proof of concept. We know that antisense works. That's the basis of their platform. But they've made continuous evolutions to their chemistries that makes it more potent and more safe. And so, therefore, now their pipeline is getting to be more attractive. Not that Wall Street's valuing that at all right now. They're not, I don't believe. But um, that's an example of a company where we would look at kind of lead assets and secondary assets. Whereas if you were to go to a one or two compound small cap company, the lead compound is going to get all the credit for now, especially in these markets. People are looking for things to invest in, but very selectively.
Fantastic. Well, thank you very much indeed for that, Dallas. Really appreciate your time, and thanks for coming on the podcast this afternoon, our time, this morning, your time. Thanks a lot.
No problem. Thank you, Stuart.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.